Happy Friday, everyone. Futures Brizio here. Friday, February 13th. Friday the 13th, 2026, 9:45 a.m. New York City time. Hope everybody's having a great morning. I got my tropical background here with my let's see if I can do this in reverse. My Aruba t-shirt, my Aruba, well, not t-shirt, my Aruba shirt here. And feeling a little tropical this morning down here where I live. So, anyways, just wanted to jump in. Sorry about that, guys. Just wanted to jump in and do a quick update here. And today we're going to we'll touch briefly on the futures markets. To be honest, I mean, I've been looking at stuff since about 8 o'clock this morning. Not really much going on. We had some U.S. news this morning. CPI news came out. So for you indices traders and futures, or you USD traders and Forex, at least something to have kept an eye out on. However, it didn't look like it had much effect. They came in about where expected. Inflation was a little bit lower, but I think the core number was pretty much as expected. Yeah, so the core CPI came in right as expected, 0.3% month over month, and the month over month top line and year over year were actually a little bit lower, which is good news for consumers. They showed in red because technically that could be a negative for the US dollar because it could lead to rate cuts and, therefore dollar value lowering. So that's why they showed in red. But for you and I, for people that are consumers, low CPI is actually the lower the better. So, but anyway, so they showed in red, but it's not really too far off from what they predicted. And it is pretty much what it played out on the charts. Again, I'm not a huge fundamental trader, but this is, the kind of stuff that you should at least have an awareness of. So we'll go through all that. So just really brief. This video could be a little bit longer because I'm going to go a little bit more into Forex today. And again, it's the same kind of methodology, just using the Stochastic RSI indicator. I did change the settings a little bit. The default settings are 3, 14, 14. I did change them to 5, 5, 10, 10, which made, mostly with the drop from 14 to 10, made it a little bit more responsive, especially because, like I said, most of my entries are on the 4-hour chart. And I found with that little change that just in back testing made it a little bit better. It's not a terrible difference. I mean, you can sit there and make these numbers whatever you want in the settings. You can continue to drop these, and the oscillator will get super noisy, and you'll get lots of signals, but a lot of them will be junk. So, and it really also kind of depends on what time frame you're entering on. If you're entering on like a really short time frame, like something like a 1-hour chart or lower, you probably don't want to make these settings too low at all, because then you'll just be overloaded with false signals. But on a 4-hour chart, I had a little bit of leeway, so I'm still playing around with that. The default settings are fine too, but I do find that this little tweak in back testing gave me some better entries. So that's the only peak. But again, we're just using this, the only indicator that I use, and I'm just using it for confirmation, and I don't blindly take signals off this. Again, my whole strategy is basically, looking at the higher time frames, daily, weekly, somewhere up in there, to kind of establish, is there a trending market? And then, you can use the real high time frames like the weekly and the monthly just to look for any major support or resistance areas that price might be slamming into. Like, you don't want to be buying as prices coming into a very obvious weekly level or monthly level, because even if price doesn't actually reverse from that level, there's going to be a reaction. And so that's really the only thing I use the super high time frames for. So primarily I'm looking at the daily chart just to kind of look at, is there a trend? Now, these are regular candlesticks. I mentioned that I use Heikin-Ashi a lot, so I can easily just flip back. So these are Heikin-Ashi candles, and it just allows you to see, the flow of the market and the major structure points without clouding it up with a lot of like in-between candles here. But you can use either, whatever you're comfortable with. There are drawbacks to Heikin-Ashi candles, as I've talked about in the past. I'm not going to rehash all that. I mean, Heikin-Ashi candles essentially is an indicator because it's kind of overlaying a different calculation to price onto the chart. It's not showing you the actual raw candle price. And so you actually could consider Heikin-Ashi to be like an indicator. So, but anyways, regardless of whether you use Heikin-Ashi or not, that's basically what I'm doing. So establishing the higher trend. So in this case, obviously, this is the rice market. No, this is soybean oil. We're in an uptrend here. And so, I say, okay, well, so with that knowledge, then I look to the lower time frames and I'm looking for entries. And ideally, what I like to see, this is the 4-hour chart, is to have the stochastic RSI pull back towards this oversold level, and then look for it to kind of bend back up and start moving higher again, and that would be a signal to potentially re-enter a long position. Now, of course, like I said, don't take that in just blindly. I will look at the price chart and look for whether it's a Heikin-Ashi candle. What I'd like to see here on the chart, if this starts to bend up, is either like a little doji candle, preferably a bullish doji in this case, but even a bearish doji would be okay, or obviously a bullish candle, and the bigger it is, the better. In Heikin-Ashi, you want ideally a candle with no wick on the bottom. Strong bullish candles have no wicks on the bottom. Strong bearish candles have no wicks on the top. Okay, in Heikin-Ashi. In a bullish candle in Heikin-Ashi will always have a wick on the top, but it may not have one on the bottom. Okay, again, a little bit of idiosyncrasy with Heikin-Ashi. And bearish Heikin-Ashi candles will always have a wick on the bottom, but may not have one on the top. Okay, so anyway, so what am I looking for? Again, cross back up out of oversold. Have the indicator bend back up here. And then, like I said, either a bullish candle signal, preferably, again, something pretty bullish. But I would take a doji candle too, because the doji candle in Heikin-Ashi kind of, again, just like with regular candlesticks, is kind of an indecision. And if it's in the right place, a doji candle can be really telling, right? I mean, there's doji candles all over the chart, and they don't always, mean anything. But in the right situation, at the right structure level, they can mean something. So that's basically what I'm looking for. So we look at this in soybean oil. This one is potentially getting ready to move higher again. We established we have we have an uptrend on the daily chart, but there's no signal here yet. Price is still going down. We still have we have a bearish Heikin-Ashi candle here. If we go back to our regular candlesticks, but, you can start to see potentially, this is, a little bullish doji forming here. But see, this is where you can get into trouble, though, with regular candlesticks, especially if you're new, because, as soon as you see a bullish candle, you might just go long, and this could just be a little bit of a pause, and then all of a sudden it keeps going down, and you get stuck in a losing position. Or if you use the Heikin-Ashi candles, you may be a little bit late on the entry sometimes, but as long as it's not like a giant rocketing bullish candle, it still will give you plenty of time to enter. And you wait for this, to change to a bullish color, the next candle to change to blue in this case, or a doji candle. So just wait it out, and we don't have a signal with the stochastic RSI yet either. You can still see they're still both pointing down and heading into the oversold area. So quite frankly, this may not happen today. High probability it won't happen today, being a Friday, and etc. All right, but anyway, so that's essentially what we're looking for. If we go on to rice, rice did give a signal earlier. This was actually, let's see on the time here. Yeah, I mean, we actually started going up last night when the overnight session started, and that is continuing here. These are Heikin-Ashi candles, and you can see we've now painted a second bullish one here. Technically, this is a missed entry, and this is one of those when I was talking about hopefully it doesn't paint a giant bull candle. So the time to get into this would have been right here. You can see the crossover on the stochastic RSI. It's not crossing out of the zone, the oversold zone, but the blue line is crossing through this orange line. And so that is technically a signal. So you can either take that or you can wait for the price for these lines to exit out of this oversold. And again, let me see if I can blow this up a little more. So you can either wait for these crossovers right here where this blue line crosses back through the orange line, or you can wait for both lines to exit out of, or at least the blue line to exit out of the oversold line before you get in. So you can see last night we had this, what I talk about, a doji candle. This is, then the crossover actually happened on the very next candle right here, which was yesterday actually around noontime, again on this 4-hour chart. And then the next candle that I painted was when the overnight session started last night. This is 8 o'clock last night, and then this morning, 8 o'clock this morning. So this was 8 p.m. last night, and this was 8 a.m. this morning, the current candle that's painting. All right, so you can see where the entry was. Anywhere in here, one of these two candles, okay? I'm not going to enter this now because it's already moved. Unfortunately, I did not take this entry yesterday, so I'm just going to not take this, but I just did want to, point out that that's what you're looking for. All right, soybeans. Yeah, this is soybeans. Again, 4-hour chart, daily chart, still looking pretty bullish. However, as I said, to look at the higher time frames to know where you're going. We are approaching a major structure high up here. We're not there yet. You can kind of see it on the weekly chart here too. So be a little bit cautious on longs, but this could make another push up. And it doesn't mean it'll stop here. I mean, it could blast right through there and completely ignore this area. But just understand that everybody else is also seeing this area. So people that are long have take profit levels sitting up here, or they just close their trade manually. You have people that are, have sell stops, sell limits sitting here to, try to pick the top, et cetera, et cetera. Or if you have anybody that tried to go short before, maybe they got stop losses sitting up here. So just be aware that this is approaching an area that's a major swing point. If we look at stochastic RSI, we don't have a signal here. Anyways, you can see that the indicator is actually just coming out of overbought, not oversold. So again, sticking to your system, then there's really no trade right here anyways. Well, there isn't right now anyways, because there's no, even if you forget about the indicator, there's no price action indicating a trade right now. But overall, still bullish on this market, but approaching an area that's, potentially a resistance area. All right, so onto the Canadian dollar. CAD dollar, this is the daily chart. You can see we were making a really nice uptrend. We had this nice pullback, tried to go up here. And then we have potentially, I always say potentially because no one knows for sure, that this is a lower high that it put in, failed to go up and make a new high, didn't even get back to the previous high. And then it's pulled back, and now we've had 2 days of down price action. So is that the end of the uptrend? I don't know, but I would be cautious about long positions. So if anything, I'm probably more inclined to look for shorts here, just because of this lower high that was put in. Price really did try to, we had two, really explosive candles went up, looked like, hey, we're going to make a new high. And then we kind of burned out here. And now, like I said, 2 down days. Now, it doesn't mean this won't reverse off of here. Sometimes what happens with this is now we'll just start entering a consolidation pattern, which we don't know yet because we don't have enough price information. But, is this going to go down, or are we going to enter into some sort of ranging market? That's quite possible too. We'll just have to wait and see. But if let's assume that you're maybe a little bearish on this market, then here's what you're waiting for. Again, 4-hour chart already have these arrows drawn out to see price, see the indicator come back up towards overbought, and then, a signal to go short again, which we don't have. And there's that potential lower high I drew. Okay, so move on to soybean meal. Again, looks like we're starting to turn the corner to go up here. We were trending down for quite a while. We had this peak high up here, and then we hit these lows down here, and now we're clearly starting to shift structure higher. So assuming a bullish bias, again, here we repeat the same process here. We go down to the 4-hour chart and we wait for the stochastic RSI to get us down into an oversold area and look for an entry. Now, I want to point out, because this is a great example of where you have to be patient and you may very well miss trades based on your system. Because if you look here, there was a signal to go long back here, which of course, and there was no exit to this at all, so you could have just held this. But if you didn't get this one, then you have not had another signal with the stochastic RSI since then. There was a pullback right here, but the indicator did not really react to it. You can see it really barely moved out of the overbought region. But so again, you have to, make your calls based on what you see. If you're sticking to a system, then you stick to a system, right? Then you miss this entry. Now, of course, if you're an experienced trader, you can use a little bit of discretion. Say, well, you're watching this and you see this, a higher low be put in and then start to move higher again. You're like, shoot, I'm getting into this anyways. It's a low risk trade. Put my stop below the low of this bear candle and just let this thing go. And that's perfectly legitimate, because that might end up happening again up here. We've got this bearish candle forming here on the 4-hour. The indicator is nowhere near oversold. In fact, it's still in the overbought region, but it is what it is. So, at some point it is going to make a deeper pullback. So you could get in here, and then all of a sudden now it decides it's overbought and it starts to sell off, and you get stuck in a losing position. So, and that's Murphy's Law, right? You didn't get this one, so you try to take this one, and then this one doesn't work out, and you broke your system, and you ended up with a losing trade anyways. So you get where I'm going with that, right? Everybody's going to have their own way of doing things. There is no system out there that's going to catch every trade. If you're following your rules, you're going to miss trades, and obviously some of your trades will not be winners. That's just the way it goes, people. So, but anyways, overall, still bullish on this and just waiting for an opportunity. And then corn, corn has been ranging. You can see it's been ranging really since. Let's see if I can shrink myself here a little bit. I don't know if I can. Oh, I can move myself. We've been stuck in a range here on corn. We bottomed out here in mid-January, tried to come back up, and we've just been basically bouncing around. But if we go to the daily chart, higher time frame, here's the daily chart. This still looks pretty bearish to me. You can see we were going up, not really super impulsive, but we were going up. And then we had this big drop. We had a few days here where price just slammed down in mid-January. We took out some, former little structure areas here. And now we've, again, just been kind of consolidating sideways. So to me, this is more bearish. But price is just not getting below this kind of support level. You can see I do have an alert set right here. What I'd love to see this alert get triggered and come back and see like a big bearish engulfing candle heading down. And then maybe that would be the impetus to start the downtrend again. But as long as it's just chopping along this zone here, you can see, I can keep extending this line out here. And you can kind of see that it's just, sorry guys, that it's just bouncing along this support level here. Okay. So I'm not in any rush to take a trade on this. I'm just going to let this bounce along and see what it does. And maybe eventually it'll break out. All right. And then we'll take a quick look at hogs. I haven't really been trading hogs, but it's kind of the same thing. Daily chart, we were heading up. And then you can see where that arrow is. That's a potential lower high put in. And maybe we start heading lower. I don't know. I'd love to see another pullback at this point, to see a pullback and then a turn back lower. So again, what I'd be looking for here on the 4-hour chart is to have price come up again. I have this alert set right here. This is just an alert to tell me that price is maybe getting into an area where I want to potentially look for a short. And, if it blows right through here and just keeps going, takes out this high, then that'll be a continuation of the uptrend. But if it comes up here and kind of burns out, doesn't take out this high and starts to roll over again, and we get a sell signal on the stochastic RSI, then I would consider a short position on this, okay? So, but as you can see, really nothing to do today in futures, at least based on how I trade. And so high probability I won't see any trades today. I'm going to keep an eye on like soybean oil, maybe for some theatrics, but that's not too probable, again, considering it's a Friday too. So, all right, we're going to flip over to Forex really quick. I'm not going to go through every pair here. I'm going to talk about it more in generalities, but the process is exactly the same. So if we look at let's look at some US dollar pairs, and again, out to the daily chart. So I kind of look at these things in groupings, right? Because Forex pairs, there's a lot of correlated pairs, meaning that because of the pairing of a particular currency, any currency pair that has one of the majors tied to it often are going to move the same way. So if you take dollar pairs, so dollar Swiss, pound dollar, in my view, like dollar Swiss, pound dollar, euro dollar, Aussie dollar, New Zealand dollar, these are all correlated pairs. Now, really, you can add any dollar pair, and you could add dollar Canadian too, but the Canadian's a little bit of an odd duck, so I sometimes put that aside. But, these are, kind of some major correlated pairs. Now, the dollar Swiss, of course, because the dollar's on the front end, is going to be kind of the inverse of the Euro USD. So usually they are inverted mirrors of each other. So whichever way the dollar Swiss is moving, the euro dollar is going to be moving almost pip for pip the opposite way. So just always remember that dollar Swiss and euro dollar are inversions of each other. Okay. And also remember that also almost applies to the pound US dollar and dollar Swiss too, because the euro and the pound USD move almost identical to each other. So if we look at the daily chart of the pound USD, just take a quick memory of that. And then we look at the daily chart of the euro, you can see I keep flipping back and forth here. Very, very similar if you're just looking at just this area right here. All right, obviously not exact, but very, very similar patterns. Okay. Whereas the dollar Swiss, you can see, is almost the opposite, just because it's, flipped down, where these are kind of flipped to the upside. So, all right. So, how am I looking at these right now? I'm actually looking at a lot of the dollar pairs pretty neutral right now. We were having some nice up moves, so the dollar was weak. And then we started moving down here, and then it looked like it was going to try to resume the uptrend, and then it just kind of stalled out. We had several days of just sideways price action. This is the pound dollar, but the euro dollar was the same way. Okay. We'll talk about the Aussie dollar and the Kiwi dollar, but these are, pretty much did the same thing. And of course, the dollar Swiss did the same thing, only in reverse, upside down. Again, just kind of moving sideways for a few sessions. So I'm kind of neutral on these right now. On the weekly chart, you can see maybe why that's happening, because we've run into some major resistance here on the pound US dollar weekly chart, and pretty much the same level on the euro, and of course on the dollar Swiss. We don't really see that on the dollar Swiss, although we kind of do. If you look way back here, there's a major low that was put in back here, but this was a long time ago. I mean, I don't know how much you can really rely on this. This was 2011. We had this low put in back here. Okay, so the bottom line is I'm pretty neutral on some of these dollar pairs, and so just going to wait and see what happens. The CPI news came out today. It didn't really move the market at all. If you look at the 4-hour chart, the news came out here. This is actually the candle, because that news came out about an hour and a half ago. So we're still on this 4-hour candle right here, and it just hasn't done anything. So though we do have the stochastic RSI bending up here, so I don't know, is that a signal? It's just the price action, though, it's very weak, inside of here. So I'm not sure, I'm going to, take anything long. I might consider it. We got the same kind of setup on the euro dollar. All right. So kind of neutral to bearish on the dollar right now. But, we'll see, which means, bearish on like dollar Swiss, but bullish on pound dollar, euro dollar. And take a quick look at the Aussie USD and the Kiwi USD again on the daily chart. You can see the Aussie USD has been the outperformer. It broke this last resistance level here. It went up. The Kiwi dollar is struggling to get past this current level right here, which also is a resistance area here on the weekly chart, which is probably why it's struggling right there. And so, but overall, still bullish on these. But you can see it's just kind of like started heading, kind of consolidating down. So we'll wait and see if we get another bullish push up here. Okay. Euro Aussie, Euro Kiwi, Pound Aussie, Pound Kiwi, all very closely correlated pairs. So again, they're not going to be exact, but these four pairs usually are going to move pretty much in tandem with each other. Again, not exact, patterns, because each one of them has their own little difference in the pairing. Okay. But in general, I would say all four of these pairs are trending down. Daily chart, you can clearly see that. Okay. We've had some recent consolidation at these lows on the euro, especially on the Euro Kiwi. But, Pound Aussie, Pound Kiwi, pretty much continuing down. So I'm looking for potential shorts still on these. I don't really see any setup right now, but, if we don't get anything today, maybe Sunday night, Monday, if these downtrends are going to continue, maybe that's when we see these entries. And right now, I think, any of these, Euro Kiwi is probably my least favorite of these four right now, but Euro Aussie, Pound Kiwi, and Pound Aussie, all potentially looking for shorts. But there's nothing there right now, though. Okay. And then yen pairs. So the yen has had some strength lately after a lot of selling off, which means these yen crosses rallying. The yen, we ran into some risk off, so the yen started rallying again. And you can see we're kind of just chopping around at lows. Let's go back to the daily chart, because this is really interesting to see the market structure. This is the CAD yen. Again, the CAD can be a little bit wonky, but essentially you can see this big move up, and then we had this big push down here, kind of took out a couple of market structure levels in this very clear and easy uptrend. All right, came down here, then it came back up, failed to make a new high, and then broke the structure again. All right, and this is kind of like the neckline right here. So if this is going to continue, this is, should be a pretty bearish setup here. So there's the CAD yen. The euro yen looks like it's already broken through, so it's actually progressed a little bit further than the CAD yen. It has kind of that same break structure, retest, and down, but it's already kind of taken out these previous lows. All right. The pound yen is already, same thing. Looks like it's already broke that structure. I am in a pound yen short on my funded account. That's the only open trade I have right now. And it's off of this pattern right here. And I'm hoping that we get some follow through to the downside. Because again, we were moving up nice, broke some structure, retested, and then, we had some major bearish price action to smash through these levels. So let's see if that continues. And then for the rest of the yen pairs here, Aussie yen has been very resilient. It has come back to a structure level here, which is not really clear with the Heikin-Ashi candles, but it's kind of the same setup. But it's been very resistant to break lower because the Aussie itself, I think, has been pretty strong. So it's kind of holding it back. So this is probably my least favorite one right now, unless it kind of gives in and breaks through. And then there's the Kiwi yen. It looks a lot like the other ones. It's kind of already broken. There is another structure level, more substantial one sitting down here. So, whether you want to count this one or not, I took that one off the 4-hour chart. But there is another structural level sitting right here. But if we're gonna enter into a downtrend, then this area right here, even though this might take a little while, will be broken eventually and we'll head down. But we'll have to see how that goes. And then US dollar yen, of course, seems to be very obvious, right? Again, we were trending up super nice. And then this huge move down took out all this structure, came back up here, okay, and then put in a lower high and is now broken again. So again, I'm looking for pullbacks and potential moves lower. So you can see all the yen pairs are pretty much grouped together. Then I've got these four grouped together, these euro and pound, Kiwi, Aussie crosses. The euro GBP is kind of in its own little world. So I'm not even going to talk about that one today. And then the dollar pairs, let's see what happens. I'm pretty neutral, like I said, on the dollar right now. And then we do have a couple of CAD pairs here. This is CAD Swiss, which is, overall kind of here's the daily chart. We're kind of bouncing around near these lows right here. So I'm not really a big fan of this right now. I just don't like the looks of it. And EuroCAD even less, because look at EuroCAD, it's pretty much sideways. It is drifting a little lower, but it's certainly not trending. It's just kind of chopping around inside of this range right in here, kind of like, something like this. And so I'm not interested. So CAD Swiss, EuroCAD, not interested in at all right now. And that's spilling over into dollar CAD. Dollar CAD's a little bit more bearish because of the dollar. So this one's a little better. But, like I said, the Canadian dollar could be a little wonky. So I'm not really looking at CAD Swiss or EuroCAD, but that's kind of the view on those other three. All right. So again, in Forex, the best opportunities, at least from the way I trade, my system right now, is this, Euro Aussie, pound Kiwi, and then potential shorts in the yen crosses. And like I said, I am short already in pound yen, but so I don't like to spread too much risk across one asset like that. So I'll probably just hold that pound yen position, and that'll probably be it. But I will be looking potentially to rejoin the downtrend and potentially in one of these four here. Okay. So I'm going to leave it there, guys. We're at 32 minutes here. I think that's long enough. But like I said, just want to do a quick review and again, show you what I'm using here, which is very, very basic. And again, just, identifying the trend on the higher time frame. If it's not obvious, then there's no trend. Like if it doesn't just jump right off the chart at you, you have to sit there and stare at it and have your brain convince you of something, then it's probably not worth it, right? Look for obvious trends. Use the high time frames like the daily, weekly, monthly, just to make sure you're not running into a major support or resistance area if you're thinking about a trade, because the price will react off those areas and you don't want to get caught. Even a pullback, a small pullback on a weekly chart can be a major trend on a shorter time frame, right? So just eyeball your higher time frames to make sure. But then once you establish the trend, then you're basically just waiting for entries on, in my case, on the 4-hour chart. Okay. And whether you use Heikin-Ashi candles or not is completely up to you. I go back and forth. I will switch back and forth all the time. And I like using the Heikin-Ashi just to kind of give the overall flow of the market. But I'll go over a lot of times to the regular candlesticks if I'm ready to enter, just to see what the real price is looking like. So, all right. So make sure you smash that like button, subscribe to the channel. Any questions, comments, leave them down below. If I don't talk to you today, have a good weekend, and we'll be back next week. All right. Thanks, guys.